Welcome back to episode 17 of the Sunday Analysis. In today's video, we're going to be covering how to trade a range and also how predictable they can be as well. Of course, we're going to go through the week's price delivery on EU and dive into next week as well, because next week is now shaping up to be another incredible week of price delivery. So let's get into today's video. So let's start now on the 15-minute chart. Obviously, if you guys have been watching our weekly Sunday analysis, you know that price is very much still in the same area. So what I'm going to do is, instead of going over the higher time frame, which is exactly the same as it was before, I'm going to dive into the intraday and the 15-minute chart and just take you through what I was seeing for the week. So we can see that last week we closed after mitigating out of the sideways range that we had here to the left. As we can see here, sideways range, I've drawn in blue as a blue square. We got that sideways range here at high prices as well. Initiation, mitigation, continuation, and that happened after we took out this previous high here. Obviously, as I said, when we take out swing highs and swing lows, that gives an opportunity for a new intention to come into the market. Now, when we see range, initiation, mitigation, continuation, that is that new intention. And look at the same price delivery that we have here. Price has given us a sideways range, initiation, mitigation, continuation after taking out a previous swing high. This shows new intention coming into the market. Now, they don't always behave the same. Obviously, this one has initiated to the downside and exploded. This one hasn't exploded yet. So that's given us a clues as to what's going to happen next in price. So now what we've seen after that, we saw that initiation to the downside. We closed very low. And then we saw price open up during London on Monday and just continue here to the downside. Now we've reacted out of this whole sell to buy that we had here. Sell to buy, that's the bank's footprint. That's what we want to look for in the charts. And that's that representation of that yellow highlighted area that I'm looking at. And what do we see? We expect to see reactions at these areas. So what did we get? Price started slowing down and moving sideways. We took the low, which shows that manipulation, and we initiated to the upside. So what did that create when we took that low? When I say manipulation, I'm talking about banks' orders being created into the market. So you see we have that sell to buy that initiate here to the upside. Now that just became a pullback in this move to see that continuation to the downside and ended up just being liquidity when we created that larger range. But we can see in the future, that was then used to mitigate out from to become a pullback here in this move before then seeing continuation to the downsides. So we can see all these orders that are being created in the market, they're being created for a reason. It's just about really understanding why they're being created and obviously where to look as well and at what points. Now we can see that that created this low that we had down here. After that pullback and that continuation, I know Chuck's got involved in a really nice continuation here to the downside. Now, where did price react from here? It's important to understand where price is reacting from and why, because this is now going to create that next intention in the market. So as we can see here, price reacted from a sideways range here. Sideways range initiated to the downside. We broke a structure low here. And then we pull back and saw that mitigation continuation. Now at this point, when we saw that continuation to the downside, we can very clearly see just in this last 2 days of price delivery that we haven't got any clear trend in the market. Now, when we don't get any clear trend in the market, we're normally in a sideways range. So at this point, this is where I was boxing off price in a sideways range, and think about where we're at as well. We're at a previous bank's buy order where they need to react out of price. So we expect to see sideways ranges at these points of mitigation. So then once we saw that, we saw continuation to the downside. We took out the swing low, and this was an opportunity for that new intention to come into the market. And this was really nice buy opportunities here after price took out the low. And the reason why these are good buy opportunities is because if we take the swing high that we have here to the swing low and we think about the location of price, these are low prices down here and these are high prices. So we're buying low and we're trading behind the swing. So when the swing gets taken out, that gives an opportunity for that new intention. And when we see that new intention printed, we can trade alongside that. So when we're on the lower time frames here, zooming in to price, and we're seeing bullish order flow and bullish structure being created, that's everything that we want to see to play this as continuation to the upside. And that's how you build very high probability trading ideas in the market as well. Just wanted to pause the video here to give a special shout out to the NJT community. As you can see, on a weekly basis now, we're just catching those 1 to 10 continuations, whether you're trading London or New York session. If you haven't been involved in our London or New York trade floors, we have some absolutely incredible traders in there that you can learn from. And we're all watching one pair, so we're all very focused on the current price delivery that we're seeing. We're learning the lessons in the moment, and you're able to ask any of the experienced traders that we have in there and us any questions that you have in the moment so that you can get your answers on current price delivery. There's no other community out there that focuses on the current price delivery like we do. And we make sure that every single trader that we have in NJT gets an opportunity to speak with us so that you can learn every single day. So what did we then see? So moving into Wednesday now, so we know we're at low prices on the higher time frame as well, because obviously we're at that point of mitigation. We've seen this sideways range that's initiated. We're coming back in. We're in a sideways range overall. And if we break down this sideways range that we're in to high and low prices, again, I always talk about high and low prices because it's a fundamental concept of how price has to move. The banks will always buy low and the banks will always sell high. Every single other high or range is just going to be used for liquidity. So this is why I'm always looking at sell high and buy low locations when I'm starting to build trading ideas into the market. So as we can see, we're at low prices. What did we see coming into London session? Well, we did have that sideways range that was created here, and that was created after the swing low got taken out that we had here. We initiated out of the range and we broke structure. That shows the intention of this sideways range. So when we came back into London and it's 8 o'clock and we got that London open and we saw that initiation with aggression and speed, we can now anticipate that we're in that continuation phase of price. So the range is where the orders are created. The initiation, breaking structure shows the intention of the sideways range. And remember, this portion here, this initiation, this is going to be very aggressive. And when we see that continuation, that's also going to be very aggressive. So we see we've got to move back down into that sideways range that we had here. So we expect that when we react out of this sideways range here, this is that next phase of price, which is that more aggressive phase. So we anticipate that at points of mitigation. And that's how we can be one step ahead of the market. So if we pair that also with the fact that price was at London open, which again is normally a very volatile time for price, when we're coming into that point of mitigation, that adds to the confluence, and then we see continuation. Now this high was also created at a low price. So like I said, when them highs and them ranges get created at low prices, they become liquidity following that intention for higher prices. So that was a very easy liquidity target to play some continuations here to the upside. Then what happened? Well, price broke out here to the upside, showing that intention to the upside. And if we're to think about higher time frame, on a higher time frame, this is a very large sideways range, followed by initiation to the upside, mitigation here, as we see from that range. And then the next day we saw that continuation here to the upside. Now, price is always creating ranges or always initiating. So even though we've got this whole sideways range, which was also on a lower time frame, a range, initiation, mitigation, continuation, this also created that higher time frame range to create that next higher time frame move in the market. So it's really important to understand your time frames together and understanding how this price delivery is being created for that future intention as well, as we always say. So now we could see that we went into a bullish trend, right? So we had the low, high, and as I say, until we get that higher low and higher high, we're not in a bullish trend. But what did we get here? We did get that higher low and higher high. So now we're in that bullish trend. That's showing that bullish intention in the market, especially when we break that structure as well. We pull back, we mitigated, and then we saw that continuation in London Open again. Now, this again was a great area to look for those continuations. We had this sideways range here where price was contained sideways. We initiated and broke structure. Again, that showed the intention. We run the low, that shows that manipulation. And what did we get? Sell to buy created. So every time we break a range low or high, that gives an opportunity for that new order to be created in the market, which I'll just highlight here for you, that whole sell to buy. And as we can see, we moved back into the sideways range that was created here, which I'll also draw on. Sideways range, initiation, mitigation, and continuation. So again, that happened again at 8 o'clock, which again is a time that we can see a lot of liquidity coming into the market, followed by aggressive initiation here to the upside. So we got exactly the same price delivery 2 days in a row. We see we got that here on Wednesday, range initiation, mitigation, continuation, and we got range initiation, mitigation, continuation here again on Thursday. So pretty much identical setups for both days. And now that created that next leg in the market where we saw that continuation. Then price took out the swing high. And as I said, when price takes out swing highs and swing lows, that gives an opportunity for a new intention to come into the market. So this set up today. So as we can see, it's Friday now. Obviously, the market hasn't closed yet. We're just going into the price delivery that we've seen today. So in Asia session, we very clearly got a sideways range. And like I said, when we get ranges at points of mitigation, this gives an opportunity for new orders to be created. Obviously, we took out the swing high. We see the initiation. So again, range, initiation is that first part of price delivery that shows the intention. we pulled back up into that mitigation and then saw that continuation. So as we see, we've got that pullback, we mitigated, and then we saw continuation. Now, quite a lot of people say that, you know, there's a lot of liquidity up here. Why would you want to sell in this range at a lot of liquidity? Well, it doesn't matter. The intention is created in this range and initiation at high prices. So this liquidity doesn't mean it's going to get used for now. The intention is more important than the liquidity. And that's what we follow. We follow the intention first before the liquidity. So this is why I was looking for sells here as well. We see strong rejections of higher prices at this point of mitigation as well. We see aggression and speed. That shows the intention. So I was looking for that pullback continuation here in New York session, and we'll just dive into that so you can just see where I was looking. And as we see again, that same price delivery that we're always looking for, sideways range, initiation, and then we pull back up into that range. We see that mitigation, and I'm anticipating that continuation phase there to the downside. So again, when we saw that manipulation, this was my trade. We initiated away, we broke the range low. So for me, that's the sign to move to break even. Price then pulled back and saw continuation. So I got the right intention, and sometimes price is going to be like that. Sometimes you'll get the right intention, but you'll just get taken out of the trade. That is just a part of trading. That's something that you just have to accept in trading as well. And you move on to the next trade, and that's just a part of your series of your 10 or 20 trades. And it's really important to understand that it doesn't matter if you get taken out of trades. You're playing your repeatable system, and you're able to build these high quality trading ideas and high probability trading ideas. And that's what makes you profitable over 10 or 20 trades. So now just a mini lesson here. Like I said, ranges become very predictable because there's only a couple of things that ranges can actually do. They're going to run swings. So these are always going to be targets for price. When we see swing highs and swing lows created in price, these will always become a target. So now that we've run a previous swing high, now we're either going to see price target this swing low that we have down here, or we're going to target the swing high that we have up here. Now, the only thing that matters after that is the trading location. We want to be making sure that we're selling high, or if we're playing this as a continuation, buying low. Now, as we saw from previously, we also had this range, initiation, mitigation, continuation. So we got the same price delivery here. Now, if this doesn't continue to the downside with a lot of aggression and speed and target this low here to the downside, which I suspect it will do, we might just start to react out the sideways range that we have here, where we initiated, we're pulling back, and then we're potentially going to see continuation and all this liquidity getting targeted. Now, for me, I wouldn't want to get involved in this trade because it's at a high price in this price range. But like I said, this is leaving clues now, because if price does decide to see continuation, we've now created a low at a high price. So if we do take out this high and we change our intention, this will become our first target for liquidity, because lows created at a high price get targeted following that new intention into the market. So that's what we're going to see next week. We're potentially going to see that as that continuation to the downside. If this doesn't explode to the downside and see continuation, then I'll be looking to see if price is going to run this high again. And then if the intention changes, then I'll play continuation back to the downside. So like I said, with ranges, it's very clear to see when price runs swing highs and swing lows, these are opportunities for new intentions to come into the market. Now, when price is ranging, it can be quite frustrating sometimes to trade ranges. And this is the goal of the banks. It's to get you frustrated. It's to get you emotional so that you can give away your money in the market. The more you give away your money, the more volume that you create in the market. And that's how they transact their orders. We might be irrelevant when it comes to the actual monetary figure, but when it comes to volume, we actually make up quite a large amount of that volume of traders. And for every buy, there has to be a sell in the market. So like I said, even though our money is irrelevant, we actually create a lot of that volume so that they can transact their orders into the market. Price running above swing highs or running below swing lows creates volume, because if you imagine there's a lot of breakout traders looking to trade above here, or there's a lot of breakout traders looking to trade below here. So what that does is that creates volume in the market, and then they transact orders into the market when they take people's stops out. Because like I said, if for every buy there has to be a sell, every sell there has to be a buy. That's why they create these high volume areas in order to transact their orders into the market, and then they move price in the direction that they want to move it. Now, this is the same for any swing high and any swing low. I'm showing you on the 15 minute. You could also do this for the 4 hour. You could also do this for 1 hour, intraday time frames as well, when they run swing highs and swing lows. It gets people caught on the wrong side of the market. So that's why I'm always trying to trade with the new intention after we take out swing highs and swing lows, because now I'm trading on the side of the banks, and they're the people that we follow. They're the people that matter, and they're the people that move price. So these are the mines that we want to get involved in so that we can trade alongside those intentions either to the upside or to the downside. Now, like I said, also we can get trends inside sideways ranges, which we saw obviously this week when we got that continuation of that bullish trend. So it's just about reading the market and understanding where price is creating these highs and lows, where the volume is also created, and where price is targeting. Like I said, when we get those highs or lows created at a high or low price, they will become targets following that intention. And it's the higher time frame that really takes the precedence over everything. The higher time frame is really what's going to give you that understanding and build your chart IQ so that you can trade alongside these intentions and be on the right side of the market more often than not. So obviously now it is Friday, so we are starting to see that aggression and speed. If that does continue, I'm just going to look for sells here for those continuations. Now, a lot of people will be looking to try and potentially buy this as a continuation. For me, that's not a buy continuation. The intention's being shown here to the downside, so I want to trade alongside that intention, and this can then potentially become that liquidity. And if we do zoom out to a higher time frame, when we start to think about the daily chart, what can we actually see? Well, price is still bearish. We've run above a swing high here on the daily chart. So this could be that liquidity grab to then see that continuation here to the downside. Because again, like I said, this low is created at a high price. So that could still be that intention. And if it's not, then I'll just trade alongside the intention if we do get that bullish continuation. And I'll be looking for swing highs and swing lows to get taken out. So make sure you're prepared for next week. Make sure you're focused because there's going to be a lot of opportunities. If you haven't already got yourself into the community and started learning our concepts, get yourself in. Feel free to ask us any questions down in the comment section. And if you did want to join us, come and join us at notjustatrade.com, and we'll catch you guys on the next video.